Sandro, when you're meeting with clients and they have you over to talk about either a large renovation or to build a new home, are they talking about, oh, hey, I've got a lot of equity in my home, don't worry about it, I'm covered for my budget, or, I own my property outright, so I have no problem to build?
Yeah, it's a good question. Yeah, I have had people in the past with that, and one particular right now that we're doing a renovation for, and he really noticed the gains in the property values in the last couple of years.
Right.
And so he decided to do this big reno, and he just assumed that it wouldn't be a problem. That he did have the money at the end of the day, but he didn't realize that it was actually a bit of a process.
That's interesting. So
getting that money.
It's kind of not like calling up the bank and saying, hey, I want to use the equity in my home. I'm going to start my renovation next week kind of deal, eh?
Exactly.
So things are really tightening up, hey, Alisa?
Definitely. So I would definitely, before they actually go and start the renovation, is definitely go and get approved and make sure that the lender is comfortable and that you got approved for that amount of money you need. Because the worst thing would be for you to start doing some work and then they run out of funds midway through, right?
Absolutely.
Yeah.
Which does happen sometimes.
I bet you've had to rescue a few, have you?
Yes, I have.
Oh, wow. So a lot of people in Vancouver are entrepreneurs, and so that means they're self-employed. Talk to me about what it's like to try and get funds as a self-employed person.
You can definitely still get qualified and get financing. There's two ways. When you're self-employed, typically either you get very low income from your company as an employee, or you declare very low dividends because you want to reduce the amount of tax that you're paying. So there's two ways you get qualified when you're self-employed. One of them is income qualified, which means is you use the 2-year average of whatever you're declaring your notice of assessment in line 150.
Right.
That's provided that the most recent year is the highest income, then you can use the average. If it's lower, then you have to use the lower amount. But again, sometimes business owners, that's not enough income to qualify. So the other one is called stated income, and that means that, say, for example, you do earn, say, $100,000, but you have all these deductions and your taxes are only $60,000, then we can use your income of $100,000. It has to be reasonable as well. And then what happens is, unless the loan to value is lower than 65%, you do have to pay the insurance premium, which it gets paid by the borrower.
Right. Okay. Well, thank you for that.